What's up, everybody? Welcome to the April 6th, 2026 IndieView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indie Wealth. Today, we're going to get right into those hot button market issues, so let's get started. Let's talk first about the jobs data that was released last Friday. It was better than expected. We're kind of on this roller coaster, a little bit of jobs reports. Good one, bad, or decent one, bad one. Decent one, bad one. We've had a couple bad ones in a row, but we haven't really had a sustained either protracted downslide or any real bullet points of acceleration. What we do know is that jobs are growing slower in 2025 and 2026 than they had been in the prior 3 to 4 years. We're in a low hire, low fire environment. I think that's still the case, is that there's not a massive amount of layoffs. Actually, unemployment went down to 4.3%, which is still historically relatively low. And it's not relatively, it's historically low. It's not the lowest, but it's low. So we have still decent data points with regard to unemployment. Wage growth is slowing. It's been the slowest in a few years. I think it was 3.5% annualized, if I'm not mistaken. So that's not a positive sign, especially in a market where we haven't controlled inflation yet. So there are some puts and takes. I would say this was better than expected, certainly. And it certainly doesn't show the component of real protracted decline in jobs that last month maybe have suggested. So again, kind of doing this bouncing up and down thing a little bit more than any real sustained upside or any sustained downside. But the bounce around is among a slower than average long-term growth profile. So not great. Turning to number 2, the Fed nomination versus the Fed criminal probe. So this week, Kevin Warsh is expected to be brought up as a nominee for the Fed governorship, or excuse me, the Fed chairman. And Senator Thom Tillis has already stated that they will not approve any nomination as long as the criminal probe is still proceeding. So there's a little bit of conflict here, is which is going to end sooner. Are we going to have a new Fed chairman? Is Kevin Warsh going to be approved, or are we going to continue on with this criminal probe based upon, I believe it was the Federal Reserve's reconstruction bill for the buildings? So we'll see. I don't think that there is anything terribly actionable here. But why I bring this up is, more importantly, along the lines of this, along with the jobs report, is probably going to give investors even more conviction for now that interest rate changes aren't on the horizon anytime soon. As you remember last week, I told you that we had a big month of difference in the effect of we went from a very high probability of having at least one cut, and then up to 3 cuts was considered, to now by far the highest probability is nothing happens in 2026. And that's because of that inflation data that I've talked about ad nauseum. So from that side, this doesn't change that course. So I think we're still on that course right now. In fact, I think it would probably solidify to investors that, hey, the jobs report isn't collapsing to where they're going to have to do anything on that side. Inflation's still not controlled, and now we still don't know when the new Fed chairman will take over. So there's a lot in flux, but in flux would suggest not a lot of movement. So I still think that's our best stance right now. If that changes, we'll let you know. Turning to number 3, the quarter did close. So we cleared March 31st. So the first quarter's in the books. So now we won't have earnings until really next week. It starts to kick in. And again, it's the financials that kind of kick it off. I think JP Morgan and Goldman are the first to go. It will be an interesting quarter, especially with regard to oil prices and the impact it's going to have on earnings estimates. And then secondarily, any type of productivity discussions. Again, we were talking about a low hire, low fire environment. So what does that mean for corporate balance sheets? What does that mean for profit margins? These kinds of things. Can we continue to sustain? Remember, 2026 estimates have continued to rise, 26 and 27, which is making the market look cheaper because the market hasn't worked terribly well thus far this year. So the market is getting cheaper because earnings estimates are rising while the prices aren't going up. So it'll be interesting to see, is that trend going to continue into this quarter where we are talking about all-time high profit margins basically for 2026. And again, that's not unique, is that we tend to, except for recessions where we contract, we tend to kind of work our way up there. It's kind of similar to the stock market, right? We have all-time highs, we fall a little bit, then we break through the all-time highs to get higher. That's kind of what happens with profit margins over very long periods of time. But in an area like this, where especially the input cost of oil prices is very volatile and certainly higher than it was at any point in the last year, I'll be interested to see what the changes are, if there's any assumptions and changes, and if we start to see those earnings trajectories go the other way. Turning to number 4, it kind of correlates with number 3, is that we will have our IndyView quarterly update coming this week. You'll see that this week. And this is the one, because we ended a quarter where we take a little bit more robust look at what's going on in the economy, what's going on with jobs, what's going on with our outlook, and what's going on with our positioning and what we call the path forward. We also do a little bit of a scorecard and saying, hey, what were our assumptions at the beginning of the year? How were they? Were they good? Were they bad? And do we still believe them, or are we changing our minds? So we incorporate all of that. It's a little longer, but we try to take a more robust look at least 4 times a year into what's going on. And this will be one of those. So tune in this week for that one as well. With that said, that's all I have for this week. Tune in next week where we'll have our next hot button topics. But until then, thank you very much. Take care.